What almost no one is telling you and nobody realizes is that while stock markets are inherently unpredictable, they actually do follow a very predictable emotional pattern that I'm going to explain to you in today's video. Hi there, my name is Ashley Micciche. I'm the CEO of True North Retirement Advisors, where we specialize in the unique retirement and exit planning needs of business owners. Now, I put out new videos several times a month, so if you like this video, be sure to give it a thumbs up. And if you're new here, please consider subscribing. So understanding the emotions that define market cycles is very, very important. And market emotions tell you approximately where we are at that particular point. So the top is defined by this euphoric, if you think about this arc, you know, when the market is peaking, people are very euphoric. Almost nobody thinks that the market is anywhere near a downturn. The economy is humming along. Everybody is positive. And then you have the bottom, which is characteristically defined with hopelessness as that key emotion. I'm not here telling you that we've hit bottom, but I am here to tell you that you can learn from the emotional patterns of the stock market to approximate where we are. So as the market peaks, and then it starts its downward slide. This initial point here is characterized by pessimism. Okay, you have pessimism, and then as it goes down, you have fear, and then you have panic. Now, believe it or not, a lot of people think that panic is the bottom, but it's not, because after panic, when we really get into the bottoming process, we have capitulation, which is basically just surrender, like throwing up your hands. You hear a lot of people at this point saying things like, it'll never get any better, this time is different, and it's characterized by a sense of depression and hopelessness. That's what you have right here at the bottom, depression and hopelessness. Now, if you can recognize these stages of emotions that the market and investors go through, you can see this bottoming process for what it actually is, which is an incredible buying opportunity. But if you're like most investors, you don't have a lot of cash on hand. So if you did have a lot of cash on hand, what you would do is, pay attention to those emotions, and you may not be able to pinpoint the exact bottom, but you can pinpoint when we're sort of in this bottoming process if you know what to look for from an emotional standpoint. And then it allows you can put your cash to work and buy, because as you know, if you think about the market bottoming process is the point of maximum financial opportunity, whereas the peak is the point of maximum risk. If you're like most investors, you just don't have like Scrooge McDuck piles of cash laying around in a vault somewhere. So you can use the market bottom instead to give you hope and optimism, and most importantly, give you a reason not to sell. Because if you know if it's hopeless, people are depressed, this time is different, people are talking about, you get this pulse of the emotional state and it's pretty hopeless, you know that the end is near and that we're going to turn around perhaps very soon. So I went back to March 9th of 2009, which was the exact day that the stock market hit its bottom. Now at this point, unemployment was still getting worse. We were still in the midst of the recession. Like the recession was still many months from ending at that point, but the stock market always bottoms before the economy turns around. So it's important to know that, because a lot of people will say, oh, I'll get back in when I feel better, when I see hope. No, that's a big mistake, because the bottom will come well before you actually start to feel better. So a lot of people at this point had lost their homes. Stock market had lost about half of its value at that point. Yet on this day, the stock market hit its bottom. Nobody knew it, of course, at the time, and it began its slow and steady climb, and spent the next 11 years until we hit this most recent bear market. It's one of the most profitable bull market runs and positive markets in history. So we had over 11 years of tremendous growth with very few pauses in between. So here's that article. It was from cnnmoney.com, March 9th, 2009. It's talking about S&P 500 ended at 12-year lows. It was at the same point that it was in 1996, which was 12 years earlier. And on that day, Merck acquired Shearing Plow, and the article basically talks about how that acquisition failed to distract investors from worries about the economy because the S&P dropped 1% that day to its lowest point since 96. And then they quoted this guy. His name is John Buckingham. He at the time, he was chief investment officer at Al Frank Asset Management. He said, "We're seeing more of the same. With an absence of good news, the path of least resistance is down." Now, in this one news article, you can just feel the surrender, the hopelessness, the throwing up of the hands, and just a simple observation of, well, it's just another down day, just more of the same. Yet, on this day, March 9th, 2009, stock market hit bottom and began one of the greatest and longest bull market runs in history. So you can use this predictable emotional pattern of the market cycles to determine, not necessarily exactly, it's hard to get that accurate pulse on the market all the time, but you can pinpoint approximately where we are in that bottoming process and then use that to take advantage of opportunities that exist, and at a bare minimum to give you hope and to keep you invested when otherwise you might feel like just throwing up your hands yourself and getting out and giving up on stocks. So, what do you think? What's your pulse right now on where the stock market is? Now, the natural question is, well, how do I figure that out? Like, I'm not a professional investor. I'm not on the floor of Wall Street. I don't really know what that emotional pattern looks like or how to pick up on these things. Well, most of us understand what panic looks like. We understand what depression and hopelessness feels like and looks like. I mean, we're all human. And so you can get a good indication of that by looking at, even if you just look at headlines, you don't even have to read all the news stories. But if you follow market or economic news and you look at the headlines, there's actually there's a fear index, it's like a meter. It looks like the fire meter, like don't have a campfire today, or like, oh, we're all in the clear. And so there's fear indexes. There's the VIX, VIX, which is the volatility. When the VIX is at its highest and the fear is at its highest, we're at that panic point. So you can get a pulse of where we are. So hopefully after watching this video, you're better able to answer for yourself, where are we in the stock market bottoming process, and have we hit bottom yet? Thank you so much for watching. My name is Ashley Micciche, and I hope you have a blessed day.